Hello traders, hello everyone. Welcome to our new webinar. Is everything fine? How's everyone doing? We have a few people that are already watching, so let me just wait a little bit longer. Let me put my phone on mute and take some tea. I always have some issues with my voice. After a few minutes, I just somehow lose my voice, and it looks like that warm tea is helping me out here. So just a second. Okay, so looks like that everything is fine. Let me just do this. Okay, so I believe everyone can see my screen here. Okay, so what's going on? As you know, market are a bit slow today because of the holiday in the US and Canada. So we have a slow trading session, but we'll still cover some of single stocks as well towards the end of this webinar. But as always, I will start with the FX market. Now, last time, as you know, we got the CPI data for the US. It came out 2.9 was actually expected. The previous reading was 3.4 year on year. It came out 3.1%. So it looks like it's still, because market did not beat expectations, it looks like that there is still a chance that actually Fed will stay unchanged with the with rates on the next meetings and maybe even in May. But still, market will now, when the US yields came to the upside, market will now try to focus on the next meeting, not on March anymore. Okay, so it really depends how speculators see Fed going forward. So if they will be increasing odds that maybe the cuts will occur after summer, then of course this will be priced in by the market. So I still think that closer we are to this timing point, closer we are going to see, closer are we to potential top on US yield. So if we start with the US yields here, here okay, so here US yields we said last time, or maybe even better, let me pull this chart on. So that's the weekly chart of the 10-year US yields. You can see that we are in a recovery mode. We are still at this resistance area, 4.3 to up to 4.5, even higher, it's the 61.8%. So I still think that's a very beautiful potential resistance area for this wave B, and I would be expecting a reversal lower for wave C. If that would be the case, then we can assume that even dollar will fall, unless there is a recession, something else is going on. Then of course even US yields could come to the downside, while the US dollar could rally, because everyone will rush into cash if something unexpected happens. So if we'll see some kind of a shift into recession in the US as well. So for now we still have this display here: lower US yields, lower US dollar. Okay, so I'm just waiting on this potential reversal that, in my opinion, could occur in the next few weeks. And if that would be the case, then we know that other currencies could really come back in play. We have seen some very nice recovery on metals. We have seen some very nice move to the upside on euro and Aussie, but not really enough to say that we are bottoming. Also on Friday, when we have seen these flows, could be due to holiday reversals. Now, when you have holidays like this one, especially on an extended weekend, you can expect that market will reverse some of the flows from a few days earlier. Okay, so it's really, I'm not seeing any kind or expecting any kind of aggressive continuation towards lower US dollar today, but maybe towards or through the week we could see potentially this happening. And of course, if the US yield, as I said, would come to the downside, dollar should follow. So if we take a look also on dollar index. Hey Hugo, you too. Have a great week, man. Okay, so here is here's dollar index. You have the daily chart here, still in upward channel. So technically, even if you just ignore the Elliott wave principle, it's still an uptrend technically, right? But whenever this channel is broken, that's the first indication that something is changing. But when you have, if you have swing lows broken, well, that's the second most important indication that trend is changing. So for now, still this first swing low at 103.38 holds and the trend line holds. So as long as that's the case, it's still an uptrend, or maybe even just we will keep sideways. But what I like so far is that the US yields have printed slightly higher highs on Friday, but what we have seen on the US dollar index is still trying to hold the latest swing high here. So if we'll see a reversal down and the US yields would start weakening, or maybe just stay sideways, the dollar could potentially see more weakness, because stocks, after all, are still doing very well despite this sell-off that we have seen after the inflation report. Stocks were able to recover back very close to its highs. Okay, so in my opinion, there is still potential that we will see more upside after a correction on stocks. So dollar here, very simple, as I said, if we'll start breaking these two levels, then I think that we could be dealing with more weakness. This could make a room for further declines here. Also, I'm keeping an eye here on the daily chart on this MACD cross. If this one would occur at the same time when we have this breakdown, and let's say that we see a daily close, obviously, because daily close is the most important price of the day. Okay, it doesn't really matter what's the price during the day. The most important price is always at the end of the day, okay? Because that will also determine where the market will open the following day. So if we see a daily close price or below this swing level, then we could say that we are headed much lower. And at the same time, if we would have this MACD cross, of course, this would be another indication that market is turning bearish. Maybe something similar to like we have seen here, a very beautiful cross as well back in 2023 in October. Now, if we take a look also on euro dollar, you can see that euro dollar has seen some recovery here. Let me just change the colors here. Okay, so here also very overlapping price action, very tough situation here. But it looks like it's a correction. We have some divergence here going on. Not really the best one, but normally you will see this divergence happening when you have slow price action like this, okay? But still, we are waiting on something aggressive to the upside. For now, the trend line still holds. So if someone you think that's a downtrend and someone will look for shorts, of course, that's still very nice intraday technical resistance, right? But from an Elliott wave perspective, I am just aware that maybe sooner or later there can be a bottom forming, and if we'll see a breakout, of course, we would see more gains. Also, keep an eye on bund market. I posted on Twitter earlier. I'm not sure if you're following the Twitter as well, but during the week, I also try to share a lot of charts there as well. Let me just find it here, please. And I will put it into the chat box. I believe it's here, or it's not. Okay, so I put it here on the YouTube into the chat box. So you can see here on that picture that we actually have, okay, we have bund market that is coming to the downside, right? You can see here we have a potential ABC decline from the top. But looks like because of free wave structure that we could be potentially approaching the support here. What I really like, if you look at the bottom of the screen here, is that bund is at the low, euro is at the high. So there is a gap. Of course, nothing is perfect here because of euro dollar rate will not be determined only by bund, but of course by US treasuries as well. So it's very important to keep an eye on rate differentials. But generally speaking, if we are seeing US yields or yields globally coming to the downside, this could have a positive impact for euro dollar pair. So if bund as well will try to stabilize and turn higher at some point, I think that the euro dollar will just see even more upside, which so far is already showing some strength. But as I said, that's maybe just temporary reaction. We aren't seeing any kind of a real bottom formation just yet, but it could be potentially forming. Now bottoms, tops, this sometimes can be a long process. It's not just a one-day event, you know. But definitely you have to keep an eye on these markets as well, not only euro dollar itself. Now if we take a look also on pound, now cable came to the downside last week, and the reason is very simple. Of course, there was inflation in the US that came more than expected, and the UK it came lower. So what we have seen is a turn to the downside on pound. There was some continuation down, but not really to a new low just yet. But I would not be surprised if new lows is going to be retested. Okay, of course, there's still a chance that we bottomed here and we will see move to the upside, but because we are not breaking and not seeing any kind of aggressive intraday bullish impulsive seconds here, I just think that you have to be aware that maybe this area of support at 12450 to 12520 will still be retested. But still, I'm tracking a correction from the highs. It just we just need some kind of a catalyst here for this market to turn these things around. Okay, but otherwise I'm still sticking with my midterm view for a stronger pound here. Now let's take a look also on Aussie. So Aussie is trying to stabilize, trying to find some support here. It's trying to stabilize and find some support after this wedge pattern. Okay, it can be an ending diagonal or maybe even leading diagonal, but in either case we can expect a free wave rally minimum. Why? Because we are breaking this trend line, and also we already spiked above this swing bullish level here. But there will be some new, I think that there is tomorrow, let me just check, monetary policy meeting minutes will be released tomorrow in Australia. So we will see if they will try to be maybe neutral, hawkish, dovish. The latest jobs, I think, let me just check, unemployment went up from 3.9 to 4.1%, and latest CPI figures, inflation for Australia in fourth quarter came down from 5.4% to 4.1%. So it looks like that this is a bit of dovish, not really hawkish, but still technically I think that it looks like a very nice and beautiful pattern. And you know, whenever you have a wedge pattern completed or ending diagonal specifically, you can expect that market can move all the way back to the starting point of that pattern, and that's actually here at 67.28. so there's a lot more upside potential here, especially if price will be able to stay or even break this bullish level here after we get these minutes out from Australia. Then I think that more upside will certainly be in view from my point of view. Okay, but if you maybe look a little bit higher time frame here, it's a daily chart. I adjusted this view recently. I labeled back in December that this is a very big ABC correction, and you're now in the end of a higher degree wave B, and we will see immediately reaction higher up to 73 or so. But because market is just moving sideways, I'm assuming that maybe this is a triangle here and we are trapped in a very big range here. But still, this will not change the longer term targets. I still think that we could potentially reach upper targets here, but with a slight delay, okay? Because if that's a triangle, you still need few legs here to complete this pattern first. But as I said, this short-term pattern really looks attractive. Also, keep in mind that we have, I have it here. I also posted this on Twitter. So here we have copper, okay? And you can see that we have seen a very nice push to the upside here over the last week or so. So I'm just wondering if maybe this commodity is headed higher for another ABC movement, at least back to retest this end of January flows. This could have a positive impact on the Aussie as well. Also, we have seen a move to the upside on gold and silver as well, but not really breaking out. I mean, gold is just moving sideways, staying sideways in a very big triangle there. But at least these two, if we try to connect the dots here, I think that as long as this market, copper, is in this recovery mode, I think that Aussie could potentially follow. Now let's take a look on dollar yen. So dollar yen, as you know, Japan obviously is concerned about Japanese yen, its weakness, especially after this market came higher after inflation report was released last week. But still, we are trading below that level. But definitely, as they said, if they want, they can act whenever they want. Okay, with potential interventions, or maybe in 2024, as you know, there is a speculation that they will change their rate policy. So we will see if this can impact the market here. But I know if we have a pretty deep and very strong move here, but still looking at this price action from a technical perspective, you're now at this potential trend line resistance that was broken here, channel resistance from the outside actually, that has been broken here at the start of December 2023, and now we are just recovering. But still, it can be a free wave movement. But really, to make sure that I am on the right track here, I should see 146 broken, okay, to make sure that we are headed lower. Because obviously I just realized that whenever we are trading so close to these highs, that maybe these highs will be taken out because there are a lot of stops above that level. So if we look at not this one, but if you look here at the potential alternation here, it's a bullish wave count, also valid in my opinion. You have impulse in progress that could potentially, as I said, extend to a new high before we see a potential top. So it really depends of when and how strong Japanese government could act against this weak Japanese yen here. Okay, I just think that sooner or later, of course, major shift in trends here could occur. Now, let's take a look maybe on dollar CAD. We talked about dollar CAD last time as well. We said that this could potentially be headed for more upside on strong US dollar. We have seen some recovery here, but really just a few sessions later on, market fell back into this range. So it's a no man's land here. But whenever that's the case, you just have to look a little bit back, and you can clearly see that this could be an impulse here. So maybe we have a deal with a complex correction. CAD has not been one of the best currencies compared to maybe others like Mexican peso or Kiwi. These two were doing much better whenever there were commodity currency run. Okay, so I'm still thinking that even if other commodities will see more upside, that maybe dollar CAD will either stay sideways. But if these other strong commodities will see deeper pullbacks, I still think that dollar CAD could potentially see more upside. So regarding strong US dollar, I still think that dollar CAD, okay, could potentially see more upside. So if I would have to turn bullish on US dollar because let's say the dollar index will just break higher, I still believe that that's the first that's the first pair that I would start tracking it very closely, especially if we will see some stabilization here at 13360 to 134 area. Also, this kind of a methodology to look at different currencies that maybe pick your best decisions for strong dollar and best for weak US dollar. Of course, this could help you for potential hedges if you have different maybe or currently just bearish dollar positions going on. Of course, you have to consider this. Now, if we take a look also on gold, so as I said earlier, gold came back into this range. So here's gold, my midterm view here. So what's going on? It's a consolidation. I believe it's still a triangle, possibly a bearish one within a higher degree wave 4, that it's part of diagonal formation, meaning that we could still run and look for another push to the upside. Okay, or maybe this is a triangle, a bullish one, and we'll see immediately a reaction higher after ABCDE subwaves are completed. So that would be alternation, but in such case I would say that this is then wave B, and that wave 3 is still coming, because in ending diagonals triangle cannot occur in wave 4. Okay, so keep this thing in mind, but definitely that's no man's land here. We're just chopping around, and because we came back above 2000 here, made some very important overlaps, I just think that this sideways price action will continue or may not be over anytime soon. Also keep in mind that maybe silver, even if this gold will try to maybe retest this upper line here around $2050, I think that silver could be much more interesting to the upside. Now let's take a look also on crude. As you know, things in Middle East can even escalate there. There are new attacks planned on a rough fresh look. Here we are still tracking this wave B rally, could be maybe some kind of a triangle, could be a higher degree, but I still assume that that's a corrective rise here from the most recent swing low here, going back to December. So watch out for potential limited upside. I think that's a very strong resistance here around $80 per barrel. Higher one should be around 82 or so. So in that area I would anticipate maybe failure break to the upside, and then a reversal maybe towards the end of the week or end of the month. So watch out for potential limited upside. It's clearly an overlapping price action here, so that's the first indication why we should be very careful at resistance levels, especially if we consider that the previous drop here has clearly unfolded in I believe in 5 waves. Okay, now let's take a look also on the S&P 500. Okay, so the S&P 500 is trading still close to its highs. I said that we are either going to see a wave B pullback, okay, where we can overlap this 4615 level. Okay, so it means that that's still ongoing complex recovery as part of a higher degree wave B, or maybe where I have this one, I believe it's here, or maybe this is good. The next pullback will be a wave 4 if we do not make that overlap. So in either case, I think that there is still a bullish sequence, incomplete, but just be aware of potential pullbacks. But as I said earlier, maybe in the short term we will see, maybe let's say in the next few sessions we'll see some pullbacks or price stabilization, some sideways movement, and then another push to the upside. And one of the reasons could be because if you look at VIX, known as fear index here, okay, you can see that there was some kind of a spike to the upside here. There was an increase in spike, and this goes back to last Tuesday when we got this inflation data from the US. So there were obviously some fear going on because everyone thought that stock market went too far and too high, and that's why market wanted to reprice some exit their positions after the announcement, and this obviously is visible as a fear for this spike here. But because market later on slowed down here a little bit, stocks recovered, I just think that VIX for now is still either going to stay sideways, or maybe fear will calm down, and even VIX could come back into these levels that we were seeing even going back to June of 2023. So this could potentially, if that's really the case for VIX index, I think that maybe in the short term we will see more upside on the S&P 500. So that's why I prepared two wave counts. Now the first, or sorry, the second count that I want to show you here, it's my second count here, actually shows that there can be an ongoing and extended wave 3. So if in this week, let's say we break to a new high here, okay, and start rallying towards 5,100 or so, I think that this could be a very nice extension in progress, and we could anticipate even more upside after the next pullbacks, okay? But if in this week, let's say in the next 2 days or so, we don't see a new high, but rather prices come aggressively to the downside and even makes an overlap here with this 48.20, then of course I think that much deeper correction will take place. In such case, I would look for that wave 4 or wave B that we showed you on a daily chart. But for now, I just think that this count should be considered, especially maybe if US dollar would come to the downside, then of course stocks could rally even further. Okay, now let's take a look also maybe as I said earlier on some of the single stocks here. I have quite a nice list here of important stocks. Now firstly, AMD, Adobe, I covered this one, I believe, in some free article or something as well in the past few weeks. What we are seeing is obviously a correction is taking place. There are going to be earnings released on this goes to March 24th. So obviously there is a room for more weakness. That's a pretty strong drop. I believe that that's wave A, wave B, wave C to the downside yet to come. So very nice support could be here around 500. Also very nice psychological level as well. Let me check the FIB here. So the 38.2% and the 50% is something that we want to look at whenever we are tracking wave 4 against the previous very extended wave 3, like in our case, okay, compared to wave 1. So obviously that's the FIB zone that we want to focus on. So if into this area we came out with free substructure, I think that more upside here could be seen then later on. Also, if we take a look here on AMD, we still are holding this support. So this week maybe we get a break out of this range that is still ongoing, so could be potentially wave 4. As long as you are above 150, I think that there can be more gains coming. Also, let me check Amazon as well. You can see some very nice runaway gap. Usually it occurs in the middle of wave 3. So if this gap will stay open and we break to a new high here above 175, I just think that this gap could stay open for a longer period until we see a completion of this 5-wave rise that is underway from end of October. Also, last time I also talked about this Coke. As you know, very nice support still for a potential flat correction would be around $56 to $57. Notice that there was some divergence here going on since December. So obviously this means that market is slowing down the bullish, but the bullish phase, in my opinion, at some point will be ready to resume. I just think that that's a very beautiful pattern here all the way back. If you look from 2022 highs, that was a 3-wave drop. We moved to a new swing low here and then reversed very significantly. So I think that maybe now this correction could be something similar like this one here, okay? So I think that maybe even, as you can see yourself, could be a left shoulder, hat, and the right shoulder. So I think that very nice support is around 56 to 57. Invalidation level obviously here at the lows. So as long as this low holds, I think that more upside can come after the consolidation. Let me check what I have left. Here's also McDonald's, some very nice ABC drop, open gap higher. I just think that this broken channel could really provide much of the gains here. Looking at Tesla, longer term. Okay, that's let me check. Okay, Tesla. I think that we are in a very big sideways consolidation, possibly a triangle if this zone of support or from 150 to 180. I posted this on Twitter as well a few weeks back. So if this zone will stay in place, then I think that more sideways and later on even higher price action will come. But of course, firstly, we have to see this and these higher prices in the near term. We are just filling the gaps, and as you know, firstly the gaps are opened, and whenever they are filled they can act as a resistance. So I think that in this week we will see if the market is really headed higher or maybe back to the downside. If the gap is filled and we see then prices breaking the supports, then I'm afraid that this downtrend will stay in play, potentially even for 150 if not lower. Okay, so that's for these were some of the single stocks. Now let's take a look also maybe on some of the cryptocurrencies. Just a second here. Someone is asking for Ethereum. Well, Ethereum is breaking to the upside. I think that there's more upside potential. Let me just change this. Okay, I think that there's more upside potential. Now if you look at our dashboard here, we are definitely tracking a bullish interpretation here for Bitcoin. So firstly, looking at Bitcoin, some very nice pullback has been seen here. Not really sure if that's wave 4 already completed, but even if we see another dip, I think that 50,000, which is by the way psychological round figure, I think that 50,000 is a next support. So as you know, everyone is looking has been looking at the 50,000 level. So as long as we are trading above that level, obviously 50,000 will be seen on that will be seen as a potential support. Whenever we are trading below it, very big mark, this could be seen as a resistance. But since we are seeing quite stable price action here above that level, I seriously think that this is a very nice support here, 50,000, even 49,000, which goes back to the previous swing high here. So there's more upside potential. Bitcoin is doing very well, and maybe will continue to do so till next halving, which, as we know, could happen in April of this year. So obviously this current crypto bull run could even continue through the next few weeks. Now looking at the Ethereum, also very nice potential, 5 waves up in the making. I think that in the next few weeks we will decide if we really are headed higher for a very big, very strong wave 3, or maybe this will be seen as a fake out and we'll see a new pullback here. But definitely I have to consider and respect the current price action. If you look at this magnitude here from 2,150, you can actually see that this is a very sharp rise compared to in a very short period of time compared to the previous rise here in this recovery mode. So in this very short period of time, we have seen a pretty nice strong move above the resistance. So in my opinion, there is much more upside potential. Longer term, definitely we are bullish on Ethereum and Bitcoin as well. But of course, we will have to consider the next pullbacks. Whenever Bitcoin will complete this wave 3 here, we'll see if that would be around 55,000, 60,000, who knows. The next pullback, wave 4 degree, will certainly at some point show up. Okay. I just think that also there are some of the altcoins that are still very interesting, but you will have to be very selective. I mean, here we have Go, and you can see OMG. You can see that we have some very nice, beautiful pattern going on. There's a 5 waves up and complex correction. There were some overlapping moves. We are breaking the trend line. So in the short term, maybe that's already a signal that we are headed higher. But then you have on the opposite side, you have some of the coins that can be approaching maybe already resistance levels. I mean, Link is one of them. Could be potentially, let me check, could be potentially trading in a 5th wave here. So whenever trying to choose to make selection between a lot of altcoins, is definitely worth to keep an eye on the substructure as well. And in general, these Elliott wave patterns on cryptos are doing quite well, because we know that these are mostly driven by supply and demand and market psychology as a whole. So we will see how these things will go further, but definitely for now cryptos are in recovery mode. Okay, traders, I hope that you enjoyed this webinar, this presentation. If you are a first-time visitor, of course, make sure to press a like, to subscribe to our channel. Leave us some commentary below what you think. Also, you can always check our website wavetraders.com or our social channels, where we share a lot of Elliott wave analysis. Okay, so traders, thank you very much for your attention and have a good trading week. Bye.